assets. Actually, it is agricultural resources and mineral resources. Biological assets, it's not dealt in detail in your F7. It's a very short, it has very limited scope. So let's discuss IS 41 agriculture applies the requirements of IFRS to the treatment of biological assets. And biological assets are living animals or plants. So you need to understand the definitions carefully. Living animals or plants. Harvest is the detachment of produce from a biological asset or the cessation of a biological asset's life process, as in slaughter. So, like I told you that, just be careful with the terminology. There is not going to be very significant part of exam from here. So, biological asset is the living animal or plant. For example, a tree which is alive and which gives you fruit, probably apple tree, or probably a cow or a goat. And harvest is the detachment. Harvest is what you get from there. For example, you get milk, you probably get wool, you probably get meat, or you may get apples. So when you detach it, when you detach the yield, when you detach the output, when you detach the produce, that is called harvest. Agricultural produce is the harvested product of an entity's biological assets such as apples or carcasses. IS 41 distinguishes between two broad categories of agricultural production system. One is consumable. Animals and plants themselves are harvested, such as beef, cattle, and wheat. Beef, cattle, and wheat. So consumable means that, agricultural production, sometimes you are, how to say, consuming the asset itself. Like wheat, you cut it, but apple tree you do not consume. And one is bearer. Bearers are animals and plants, they bear produce for harvest. So for example, you may, raise chickens or hens for getting eggs, or you may get it for, or you may raise them for getting meat. So if you are raising them for getting meat, you call them consumables. If your intentions are to get eggs, you call it, bearer. So bearer, these are the animals and plants. Like apple tree is a bearer, but a wheat plant, it's a consumable because you consume it. An amendment to IS 41 in May 2014 transferred the treatment of bearer plants such as apple trees to IS 16. So they are now accounted for in the same way as items of plant and equipment. So this is interesting, you should understand. Bearer trees, you are bearer plants such as apple trees, you are not treating them under IS 16. Recognition, animals and plants are recognized as assets when the entity controls the asset as a result of past event. Now again, we will have 2 or 3 issues: recognition and measurement and presentation step. So animals and plants are recognized as assets when the entity controls the asset as a result of past event, and it is probable that future economic benefit, the same 2 criteria which we used for other assets as well. So that is the time point when you decide to recognize it. And the fair value of the asset or its cost to the entity can be measured reliably. Now, fair value of the asset or its cost. Because in some cases, cost may not be justifiable, so you go for the fair value. And in some cases, fair value is not possible, so you go for the cost. For example, if you talk about, measuring the value of, if you have some sheep, so if you talk about a sheep, it's a grown-up sheep and you have to value it. So there are 2 ways. One was the cost, which means the amount of money which you spent on raising that sheep for the last 8 months. You have been giving food, you have been taking care of, you have been spending money on the people who are taking care of this, this flock of sheep. So that could be a cost thing, but it is better that you go for the fair value, that what is the market value of a grown up 25-kilogram sheep. So you go for the fair value. In some cases, fair value might not be possible because the item, the asset does not have an active market. For example, if I talk about uh, a wheat crop or a cotton crop which is not ripe yet, which is not ready yet, so it's not possible. Nobody, you cannot find a buyer. If you cut it, you cannot find a buyer. It is not ready, it is not ripe, it is somewhere in the middle, but it does have some value. So fair value you may not be able to find out. You go for the cost model then. So measurement, IS 41 requires all biological assets to be measured at the year end at fair value less estimated point of sale cost. This is the same measurement standard like net realizable value. And fair value can usually be taken to be the market value. So market based estimation you do. Any gain or loss arising from changes to fair value is recognized in profit or loss. Bearer plants are measured at cost or revalued amount less accumulated depreciation. Accumulated depreciation because we said that these bearer plants they usually have a life, okay? And I mean you cannot expect an apple tree to give you fruit for eternity. You know that an apple tree may be giving fruit for next 10 years or maybe 15 years, after which it must be cut down. So you have to have the accumulated depreciation. You can depreciate it over the 16 years period or whatever. Biological assets, agricultural produce is recognized prior to harvest at fair value, less estimated point of sale cost. So agricultural produce, your harvest, is recognized prior to harvest at fair value, less estimated point of sale cost. Following harvest, agricultural produce is classified as inventory and accounted for in accordance with IS2. So these are the two stages. In this stage, your produce is ready, but it is still attached to the asset. It has not been detached. It is still with the bearer asset. But in this case, you already have detached it from the asset. So it could be, probably you talk about meat. You already have slaughtered the animal, so that's meat. Or probably you have got apples, which you already have taken off the trees, and these apples are in your warehouse. So now they become your inventory. They become your inventory. As long as they were attached to the asset prior to harvest, then you take them at fair value NRV, like, fair value at estimated point of sale cost. And that's all with this. It was a very short standard. You just need to know the terminology. There might be a very short 1 or 2 mark, like I said, section A, 1 2 mark question can come in. It's not something very difficult or technical which we need to do. Yes, I do want to give you some additional knowledge on that, which may be helpful. Let me show you some other slides. So measurement of biological assets, like this is something, one thing additional which I wanted to share. So your benchmark treatment is fair value less estimated point of sale cost. You may have alternative treatment like cost less accumulated depreciation, which I told you before. Now, there is one more thing which I want to emphasize. This is an important principle whereby the change in the carrying amount for a group of biological assets should be allocated between the change attributable to differences in fair value and the physical change in biological assets. So these are the two things which you need to remember. You say that, carrying amount has changed. Why the carrying amount is changing? The carrying amount can change because number one, because there is a change in the fair value in the market. The market prices have gone up. Or maybe there is a physical change in the biological assets. For example, before you had sheep which were 3 months old, but now at the end of the year, the sheep are, for example, now they are 1 year old. So now the fair value of the sheep will increase, not because the change in the market value, but because of the physical change in the asset. Okay. Like you can imagine grown up or a ripe crop or an unripe crop, or a tree which is giving fruit or a tree which is not yet ready to give fruit, or a hen which can lay eggs or a hen which is not old enough to lay eggs. So you call it physical change in the biological asset. So these are the two differences. There could be two reasons why you are getting changes in the carrying value, and then you need to do treatment accordingly. The change in carrying amount attributable to the physical change in the biological asset, physical change, must be recognized as income or expense and described as a change in the biological assets. So it is income and expense because you know what? You worked on this asset, its physical condition has changed. And how physical condition has changed over time because you have been contributing toward it, you have been feeding it, you have been watering it, and you have been taking care of that, you have spent money on that, and you incurred some expenses on that, okay, and therefore you must recognize the income. This allows management's performance to be evaluated in relation to the production from and maintenance and renewal of biological assets, how management is taking care of these biological assets. This is the operating part of the change in the carrying amount, okay. So that's important to remember, that if it is happening due to the physical change, then it is related to the management performance. It becomes part of your income statement and it's your operating income. The change in carrying amount attributable to differences in the fair value, differences in the fair value, now that is the market value has changed. Suddenly the prices of meat they go up, the wheat price goes up, should be recognized in equity under the heading of surplus or deficit on fair valuation of biological assets. This is the holding part of the change in carrying amount. So if it is happening, the change in the carrying amount is happening, the fair value change is happening because of the market prices, it's not the management's contribution, that's market condition. So just like you remember your the part of your income, revenue, other comprehensive income type of stuff, what is coming because of the management's effort and what is coming from the market or beyond management's control. So differences in fair value because of the market conditions, they go into equity section. So this was one important thing to remember. Otherwise, that's all in this chapter, nothing else.
So very important